Welcome folks, this is another short tutorial for the Gamma Central application. Just because we are in the new earnings season, then I added a new earnings tab, and in fact today I have just added a little bit more functionality to it. So this short tutorial is just an explanation on how to use it. If you have used the Gamma Central before, you know that you have several tabs: volatility, open interest, volume, earnings. You can do all sorts of interesting analysis here. But let's look at earnings today. Let's look at Netflix, for instance. Netflix reports today after the close. As you can see here on the term structure chart, implied volatility is through the roof. Now we have 92 almost 93% implied volatility for options expiring this Friday, and then it kind of dies down and the curve flattens eventually. So this is a very typical profile for an earnings underlying when a particular symbol is going to report earnings. Option dealers start overpricing the options because you have an event that is very hard to predict. Sometimes a company can move 20%, 10%, sometimes it doesn't even move. So if you're in the business of selling options, making markets for people that love to buy options, you have to price them for the tremendous gap risk that will occur tonight. Now the options market is closed and something happens and the price just moves. So that's called gap risk, when there is a tremendous jump in price that is impossible to hedge. So if you are an option market maker, you love to hedge your options, but now because of earnings, it's really hard to do it. Tomorrow, when the market opens or when you have enough liquidity to hedge, price will be substantially away from where it was today. So that's the thing. The thing is that's why it's so overpriced. But the earnings tab provides a little more insight to it, not only telling you, oh, wow, this is tremendously overpriced, look at the variance risk premium is almost 300%, it's 261%. But how is that useful to us? So I added a little earnings tab, and the earnings tab provides a little more information about earnings. For instance, it kind of guess what is the expiration closest to the earnings. In this case, the expiration is this Friday, the July 21st. But better than that, it's telling you the expectation of what is the move that option dealers are charging into the price of the options. So options are priced right now. This is real-time pricing. Options are priced right now for Netflix as if Netflix is going to jump almost 10% after earnings. It is a big jump. However, did you notice it's not as big as historically? This is like it's just the mean of all of the earnings reports from Netflix since inception. Now, since Netflix started until now. So historically Netflix has moved a lot. So in fact, this price doesn't look that impressive. This amount of overpricing compared with historical, and I guess one of the reasons is that for the past few earnings cycles, Netflix hasn't moved that much. So I guess the expectations have come down a little bit, but still it is overpriced. And I throw a particular statistic at the bottom, which is more complex than just the mean. This is using the mean and standard deviation for historical earnings, and it's telling you what are the odds that the move tomorrow or later tonight is gonna fit within this interval. So the odds are lower than 50%. So there is a chance that Netflix might move more than what options are implied. However, take this with a grain of salt. Remember that this is considering the past, all of the past, and Netflix has calmed down a little bit with recent history. This used to be a beast. It used to move a lot. Now it moves a lot, but it's kind of, the beast has been tamed somehow. So in any case, it's useful to know, compare with the historical volatility, what is happening. For some of you that love to create non-directional trades like the one that like I plan to create later tonight in the room, later today before the close. So it gives you an idea of all of the expirations with what the implied volatility. You remember this is very similar to the variance risk premium table, but it also tells you after earnings what is the expected new volatility. So I am computing mathematically the expected drop of volatility. You know, the methodology is pretty simple. But it's kind of more complex that I can explain in the video. If you are interested in the methodology, I can provide it to you. It's not a secret. But you can see the change. The change is the expected volatility collapse. And you can see massive volatility collapse for the options expiring this Friday. This is a massive volatility collapse, almost 60 points, 60 volatility points. And of course the collapse is lower and lower as you get farther, but it's still significant. For instance, 30 days out is almost 10 volatility points, and that's a significant drop. If you are trading something, even though it's long term, you are going to lose money tomorrow if you are net long options in Netflix. Probably you'll be safe in January, I guess, 2019, which only drops, the expected drop is less than a volt. But remember that Vega for those options is gigantic. So in terms of dollars, these options might drop significantly in price too. So there is going to be a repricing of options tomorrow. And if you are playing moves, directional moves with options, you are going to lose a lot of money. I'm telling you, you are going to lose. And the only way you can make money is if Netflix moves more than this. So no matter what option you are buying, no matter if you're buying at the money options, no matter if you're buying options that are deep in the money, you're only making money if Netflix tomorrow moves more than 9.62% in your direction. So it is a dangerous business playing directional moves with long options during earnings. But conversely, this gives you an idea for those of you that have lots of imagination. This gives you an idea that you could play the move in a different way. Instead of being net long options, you could design something kind of directional, but that also benefits from the volatility drop. And that's precisely what we did in the room today. For those of you that follow the Gamma Optimizer room, we have a nice trade in Netflix for August 25th that is playing in this drop of volatility. So the drop of volatility will benefit the trade plus the direction. So the idea is to make some money as the trade, as volatility collapses, and also as Netflix moves into the direction we went. So this is the earnings tab. I hope you enjoy it. It's very simple to use. It's very simple to identify. If you have questions about how to use it, just send me the questions here in the YouTube video, or you can do it also on the Gamma Optimizer room, whatever is more convenient for you folks. I hope you enjoy the new earnings functionality. It's very simple and it's right on time for the new earnings season. Have fun.